Good morning, ladies and gentlemen, everybody. Welcome back to another stream. Sorry I wasn't on. I believe yesterday was a little busy. But thank you guys again for joining in. All right, we should have a very interesting day. Okay, we have not seen the markets up like this in quite some time. But it was to be expected. This was pretty much expected. Maybe not as big of a move, but it was to be expected that the markets were going to be pushing up here. So this is the first really bullish day we've seen. Most stocks are going to be opening with a really big gap today. Doesn't mean that you should instantly be long on them. We're going to talk about that. But today is a fun day. This is something that we have not tasted in a while, and I think it's going to bring a lot of excitement to today's market. Okay. Daily bonus. Good morning. What's going on? Good morning. We'll wait a little bit here for the stream to populate. It's a dead cat bounce. Yep, you're absolutely right about that. Yep, you're correct. It is a dead cat bounce, or most likely. I mean, I guess you can never really say for sure, but yeah, we're probably most likely looking at a dead cat bounce. Currently, the only spot you can even justify maybe considering a new short position is at 285 to, well, that's not going to happen, but yeah, maybe 285, 290. That would be the only level now we could even consider maybe entering somewhat of a short play. Okay. Good morning, guys. Good morning. So the markets are bouncing, and the airlines, or sorry, not the airlines, cruise lines are starting to reverse. All right. So CCL, take a look at that. Last night on our Facebook group, we did post. Not that it's really anything too meaningful, but we made a post on Facebook in our stock group, and we're basically saying, watch CCL long. It's got a bullish divergence. So we gapped up today, and basically CCL's in a gap and go setup, right? So the gap and go setup basically just means stock gaps up and it's going to run out of the gates. There's a strong chance that CCL does do that. That is the sort of formation it's in. We still have room up to $13 for a first long target move. You still have support down to 11 right now. So depending on which way the bulls or the bears take this sucker out of the gates, whoever wins the battle there is probably going to try and push that to about 13 to 11. It's all kind of dependent on the market as well, but so far CCL has a pretty good formation pre-market. The daily chart is more or less what I'm interested in. If you look at the daily chart, we have our divergence. Divergence has been put in play here. And then we have our uptrending momentum. So we have a divergence starting to play out a bit. Right now, if you're like long swing, you could probably target the $20 zone for CCL right now. Okay, so we're going to keep a close eye on CCL today, obviously alongside with the markets. Okay. You have SPY puts expiring in May. I don't think that's long enough, personally. I mean, yeah, I don't know exactly your whole position and whole play, but I don't expect, like, for example, the market will not be below 218 by May. The market might be back to 250 by May. I mean, if you think about it, right? So for this took, let me put it on this chart here. If we go back and look at the SPY, all right, so if you just take a look at the SPY here. So it took, let's see, from basically here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. So just this whole section was almost about a month, right? That was about a month. Okay. You only have, you got about 2 months if it was to the end of May. So we're up to about here. You'd be towards the end of April. This would be halfway May. It's hard to say, but you might be okay. You still got some time there. You might be okay. You'd be better off being like the end of the year personally, but like, yeah, if you were trying to catch like the next leg down, you'd be better off playing out for like a year personally. That's probably what I would do. But yeah, anyways. So pre-market, you can see here SPY. It has held our regression trend very nicely. That's a sign that we might actually try to blow out of the gates. We are high in the cycle, but that hold there is pretty well. So anyways, we're still looking pretty decent here in the market overall. Before we were looking a little bit shaky as we were kind of trading down. If we could have crossed here, we would have snapped. But we end up going the opposite way. So that's good for now. That is good. Okay. There's only one penny stock that I was actually looking at today, and that was DPW. Doesn't even really look that great right now. It was the only one that I was really concerned about that was gapping this morning. Unless you guys have something else you would like me to take a look at, you can put it in the chat. You're looking at puts on financials, okay, banks, pretty much. Okay. I mean, I would say if you really want to be short financials or you want to be short banks, not that I am, and not that I've really even put too much thought into it, just off the top of my head, if you're going to be looking into shorting financials or banks, and you really would want to, you're really hoping that we go to a negative interest rate economy to the point where banks aren't really making a whole lot of money by even loaning out money, so that the actual the bottom line on their books will be taken down from the financials. And you're also hoping that there is maybe some type of mortgage crisis fallout. So yeah, I can see banks going down a bit. Don't think it's going to be like 2008. They had their hands in the cookie jar way too hard then. But yeah, I could see financials and banks going down a bit. I wouldn't disagree with your play there. What about Boeing? I'll take a look. I haven't looked at Boeing in a couple days. We're gonna be periodically updating it as the weeks progress, so you'll start to notice some things changing in there. Con, you trading any tickers today? Yeah, I'll be trading some tickers today, most likely. MGM, CCL, resorts, cruise lines, airlines. It doesn't really matter what you're looking at. I guarantee if you're looking at a stock today, it's probably up. But the airlines, they've been beaten down. Cruise lines, they've been beaten down. They're all in the oversold. They're all in the buying zone now. I know a lot of the world is saying, but they're still docked. They're not taking in any cruises. Nobody's booking. No, obviously, that's what we anticipated would happen. Hence, stock market price reflects that currently. Okay? That's kind of the way the market works, right? Coronavirus pandemic, cruises are terrible. No one's buying cruises. Then the stock market crashes and everyone's still reading, well, they're not taking on any new customers. And well, yeah, exactly. The stock market price is literally reflecting that of what the company is doing right now. So right now, I mean, a lot of these cruise lines are actually good times to be buying. As long as they come back, which I find it very hard to believe that in the next 10 years, cruise lines are going to be bankrupt, that there's not going to be one cruise ship still out there rummaging through the ocean. So yeah, cruise lines are not going anywhere. They'll most likely be here. Think about how big they are. Think about the ports in Miami. Think about all the infrastructure that's gone into and around that business, the amount of jobs that get outsourced to third-party companies just in Miami, in that port in itself. So there's a lot of business around the cruise line industry, not just directly from the cruise line, a lot of third parties. So that's one of those situations where it's just too big to fail. Maybe some mergers might happen, but ultimately they're going to be here. Airlines will probably remain to be here. So, if you have a little extra bit of money that's not going to kill you, throw it in there and just forget about it. Okay. Yeah, the volatility in the market will probably stay, it will stay higher. Excuse me. It'll stay higher than that of like 14, 15, 20 maybe. Let's go take a look at it rather than me just talk. So if we do look at the VIX, you can see that the volatility right now is in the 40s. You're probably going to see the VIX go down to about 35 over the next couple days. And it will probably, the volatility index will probably bounce here at about 35, 36. So when the volatility index gets to 35, 36, go take a look at the S&P 500. You're probably going to notice it's going to be at resistance. So our next kind of down move in the market, or our next bounce on the VIX or volatility, or next bounce on UVXY, TVIX, is probably going to be around the price of 35 here on the volatility index. So, yeah, I could see volatility maybe staying up for a bit, but yeah, that's it. We should bounce here. That's it. We bounce here, and if we break this low, that's when the markets are going to recover, right? If we break that low, right? If this comes down, we bounce, and then we kind of roll over and break back down the volatility index, the S&P 500 would be going back to its highs. I wouldn't be surprised. So anyways, volatility will probably remain above 30 for quite some time at this point. Is it worth reading the tape for blue chip stocks? Honestly, there might be somebody out there in the world that can answer that question better for you. I mean, I've seen, I've read little articles on tape reading, and I've even seen, the advertisement from time to time, like, ooh, become a master tape reader, or, some trader somewhere in the world saying that tape reading has been his ungodly thing that's led him to a mass amount of profits. But no, tape reading has never really done it for me. And honestly, it could very well be that I just don't know exactly how to read it, whatever that everyone's seeing. Then again, I don't need to. So I pretty much just trade off price action. At the end of the day, I pretty much just use volume, charting, experience, practice, history, and price action. Because if a stock's going to move up, a stock's going to go up. You seeing that somebody purchased so many shares, maybe it gives you extra confidence, but if it's going to go, it's going to go. And if it's going to go, it's going to start at a particular price. So if I can just find the particular price it's going to start at, it's going to be a winning trade, regardless of whom else in the world is buying it, right? So I don't know if tape reading is really all that is made out to be, but I've never used it in a way that's really helped my trading progress astronomically. We already broke the lower high on the yeah, I don't. We might be referring to something different there, advanced trader. So, anyways, yeah, that's about it. So we got cruise lines starting bullish divergences. Those are probably going to have decent days. The market's holding up pretty well. At least it was from the last time I looked. That's a good hold. Again, on the daily chart, we have resistance coming in at 285. And on our 4-hour time frame, we got some resistance coming in at 280 or 277. So if the market pops and kind of runs up out of the gates, I would project that the market gets to about 277, and then we're going to sell off on the day a bit. So if you're long, maybe had a call overnight. I bought a call yesterday before the close, anticipating we would jump today. So I bought one call before the close. I think I bought a 270. So it was a pretty far out of the money call, but I knew the volatility was there. So as long as the markets stay up and actually do what I'm talking about and press up towards the 277 mark, then that call is going to be pretty deep in the money today, and it will make a decent amount of money on that. So I think, again, if markets press out of the gates, we have up to 277 on the day for right now. Nothing more. Which, what do you know? The 277 mark from the 4-hour time frame just so happens to perfectly match up with our intraday resistance, which is right there. So I'll call it 277 is the top for the day if we get there for right now. If it goes through that, then you just got super lucky. We all got super lucky. But that's it. If markets go through 277, everybody and their mom got extremely lucky today. Well, advanced trader, they're not buying in. So that's the other thing, right? Is everyone is. I think a lot of people are building this idea that, that the pandemic being over, and it's when you look at the share price of Carnival stock, it is extremely low. Regardless of the pandemic is what's caused the price to be that low. The pandemic, that is pandemic pricing. All right, CCL at $10 or whatever it's at right now. That is pandemic pricing. That's not future price. That's pandemic pricing now, right? So if the pandemic continues in the future, I mean, we're really maybe a little bit lower, but in the risk to reward side, I mean, you have $10 back to like 60 or $10 down to 0. The risk is favorable to the upside. You have a more favorable long bias trade there. So I don't know for sure when this is all going to be done for, but it's pretty much done. I know I sound like an asshole saying that, but I always sound like an asshole being the first to say something. It always happens that way. Sometimes I'm wrong, and I admit when I'm wrong, but that's okay. So yeah, I would say currently, situation revolving coronavirus is pretty much over. When I say over, I say it in the sense that yes, things in terms of somebody close to you maybe getting sick, having a hard time, or maybe a relative, family, friend, someone dying, you might actually experience that. I've experienced it, not immediate family, but close. So I've experienced that. So it might get worse for you individually in that sense. But the media, everybody knows about it. It's been blown extremely up. So we're at the peak. This is the peak. You are in the peak of the pandemic, corona, news. I know it. You know it. The market knows that the market's done. So we've already peaked in that regard. That's already happened. Okay. We've already peaked there. We were preparing for this whole scenario like 4 months ago, well before everybody else. Okay. We were preparing 4 months ago. All right. And now I would say that we're pretty much done in terms of the scare. We're going to be on the road to building a vaccine, having drugs that definitely help treat it. So this is all going to kind of start clearing up and becoming old news soon. And the media is going to need something new to jump on. And the new thing that they will most likely start jumping on is going to be the stock market. Okay, if the stock market goes through a dead cat bounce here and starts to roll over, the next thing they're going to be talking about is the stock market. And they're going to start scaring everybody out of the stock market. And then they're going to start pumping gold and silver more. Okay, gold and silver are recovering nicely. So if my analysis is right and many others are right amongst the market and we're in a dead cat bounce and our market's meant to go lower, we're probably going to see the mainstream media turn over to pumping the stock market crash, and then they're going to turn over to pumping gold and silver long in the markets, and that's going to be kind of the next big thing that we'll hear amongst the financial world really big. That's kind of where I think we might be heading to next, okay? So I think coronavirus pandemic, we've pretty much peaked. We're at the whole top of it, and I don't think there's too much more the media can do to really amp it up, okay? That's what I mean by saying we're at the peak of it. Is we've really, what more can we really look forward to in this scenario? Okay. Ignorance. Yeah, maybe it is ignorance, but we called the bubble on Tesla. We called the corona pandemic well before most. We said quarter one would be bad. We said quarter two would be bad. No one believed us. Then JP Morgan came out and cut quarter two by 30%. So maybe it is ignorancy. Who knows? Maybe it is. Maybe I got to admit the guilt. I would hold gold. Yep. I would agree with you there on that. Holding gold for about 5 years is probably a pretty good outlook. Second wave up or fifth wave down? Fifth wave down. I would say ultimately the market. So if we look from like a 20-year chart, no, I would say that we are on our down move. And so this is our first move. We have our corrective wave, which will be here. So if I can map this out correctly, so we kind of have the breakout there. So what was it? Wave 1, wave 2, wave 3, wave 4, wave 5. First wave down, second wave back up, third wave down, corrective. That's your bottom. So that's what I was saying, is if you're looking at Elliott wave, we are in our first pullback wave, and our corrective wave would, yeah, I mean that's just it. Wave 1, so wave 1, 2, 3, 4, 5, pull back, bounce back up, corrective wave down, which would put you literally right into the support of, like, call it 17, 18. That's what I would look for, personally. I think if you're like going for a trading mindset and you're not just a buy and hold investor, then you're better off just waiting right now, right? So whether or not all that bullshit that I just said about Elliott Wave works from a simplistic view, if you just want to look at it from a trending side, you're way high up in the market, right? So this is the buy. So let me say this down here. All right, so you have your BUY down there, and you have your, actually let me rephrase that, it's actually in this channel it's a buy, and in this channel it's theoretically, the higher you get up, it's a sell. Okay, so then what is this right here in the middle? That is just normal or neutral or normal trend. All right, so in reality, so whether or not all that hibbity hoo-ha about Elliott Wave works or doesn't work, one thing that's for sure a fact is that from a trending cycle, we're really high in the cycle still, even after the big sell. We're not really high, actually, no. We're at about the normal trend right now on the S&P 500 from a 20-year chart, weekly time frame. Back in the beginning of, like, what is that? February, we were extremely overbought, extremely high in cycle. The markets were extremely, extremely euphoric. And so we've gotten to the normal trend here, and there wouldn't to me be a low risk entry to buy the S&P 500 until we're down here at 1,880, right? And if we did a corrective leg, and if I'm correct about it being Elliott Wave, we would then see, again, a corrective move to break those lows, and we would maybe come back down, something like that. And that would put you literally at this previous price action support, which then lines up right here. I mean, it just seemed, which is the previous top of 08. It just all seems logical. That's our buy point there on the S&P 500. Okay. Yeah, so long term, which I've been buying, again, long term, which I've been buying for, I think, maybe 3 years now. Gold and silver, just been buying gold and silver religiously for 2.5 years, and it's starting to pay off. It's not the biggest win ever, but it's paying off. It's hedging against the loss that I've acquired from the down move in the market. So I'll probably be long gold and silver for the next 3, 4, maybe 5 years, as one of the members in here said, or one of the people in chat said. I'll probably be long gold and silver for the next 4 or 5 years, and then I'll start deleveraging out of gold and silver Well, here's the thing is the stock market will start to actually bounce before gold and silver tops. If gold and silver goes on a bull run, like I think it will, the stock market's going to start bottoming and becoming a really good buy well before the gold and silver tops out. Because what ends up happening is if gold and if silver go on a boom, those asset classes will start getting what? They're going to start getting pumped up by CNBC. They're going to start getting pumped by the market. Okay, and then once the market starts pumping them and it becomes a mainstream media thing, then you're going to start getting a whole slew of new buyers coming in and blowing the prices up. So they're going to bubble out that asset class. Meanwhile, the S&P 500 and other stocks are actually becoming really good things to buy. But since they're performing so well, the media will push towards those, which is going to gravitate new traders toward, and they're going to blow those asset prices up. So the goal would be to have gold and silver go on a run, and as the asset class starts to bubble out, slowly deleverage and then throw that money back into the S&P 500 or back into stocks that are more favorable at that time. But if you wait until the absolute top of gold and silver, you're going to be well late to the dip buy or the bottom of the market. Okay, so that's kind of my outlook for what I'm doing. All right, guys, it's 9:02. I'm gonna call it a day there. I'm gonna talk with Brandon, our my partner here, and if we can, I think this Thursday I'm gonna try and hop on live with you guys throughout the day and trade with you for a good portion of the day and answer some more questions. So for those of you watching now, plan that this Thursday we're going to get online a little bit later than 8:30. We might start at like 9, like right now. Take the 30 minutes, go through the market, and then we'll be trading at 9:30 onto YouTube. So for those of you watching now, if you guys want to join into that, plan for it being Thursday. We're going to start stream a little later, probably around 9, and then we're going to trade some as well. Okay, everybody, take care. Have a great day. I hope I am correct, and I hope this is the top of the scare for the pandemic, and I hope that I'm wrong and that there is no more economic fallout. I hope everything goes back to normal. Everything is sweet, cozy, and sound. We all get back to working perfectly, and everybody gets their jobs, and life goes back to normal. But I have a strong feeling it's not going to happen. But I hope I'm wrong. All right, everybody, let's take care, and I want to have a great day trading, and I'll see you guys tomorrow morning and then for a trading day on Thursday. All right, guys, take care. Have a great day.